once you start utilizing this concept as a process that, we teach people how to, do privatized banking at the you and me level. Once you start to, adopt that in your life, it's important to surround yourself with other people that are like-minded and, are in that same communities. Hey, if you get an opportunity to understand, how this makes a difference for you, that's what I get excited about. It's like, until you actually can control the banking function as it relates to your needs, well, there's an opportunity. That's what I tell people. You have an opportunity.
All right. Well, excited to be here today with my good friend, the Mr. Dan Allen, an authorized infinite banking practitioner. And normally, we're recording this on a Friday. I typically have Jason Lowe with me. He's attending a great session, a training session with some of our colleagues down in Florida right now. He's really upset that he's there because of the weather in Florida.
Yeah, I can imagine.
We got a good, we saw a good email I think he sent out, or he did a post even, maybe it was on Facebook, where he kind of did a little bit of recording shots showing the beach in the background. And I was like, dude, enough about the beach. What's that food truck that's down there?
Exactly. Yep. Always good to get.
But I'm excited to be with you, Dan. We're going to kind of just jam on some things that have been on our mind a little bit here. And one of the things I wanted to just kind of touch on real quickly is that, for our clients, people that are clients of Ascendant Financial, one of the things that we do, some folks may not know this, but we have ongoing regular client coaching sessions. And those are, typically done once a quarter. So we have one of those coming up fairly shortly in about a week and a half or so. I'm really excited about it because, it's an opportunity for people from all across the country to come together. Yes, it's all on Zoom, but pretty much everything is these days. But people get a chance to get together, and a lot of times we have new folks that are maybe just starting, just embracing the process of infinite banking, and then we have people who have been doing this for 7, 8, 9, 10 years that are joining, and so they're there to learn something new. They're at a different stage. People that are at different stages of their journey, they're at different stages of life, and it's really cool when we get to bring those people together and they get a chance to connect with one another. We do some breakout rooms, breakout sessions where you get to have a little discussion. And it's really surprising to me. One thing I always am fascinated by is how having an event like that gives people an opportunity to connect at a level where all of a sudden a little bit of magic happens. And now, a couple months later, we find out, hey, Bob and Dave, they connected at an event, and hey, now you're creating a business together, or they're doing some kind of joint activity. And that's really one of the beautiful things about a community. And Nelson would say that when you keep things in the community, or you keep it in an aquarium, you get to kind of maintain the dollars a little bit. You're just running the same money through. So it's like supporting one another a little bit in that way, which is kind of neat. Now, you've attended these events, Dan. I'd love to get some of your commentary on what are some of the takeaways you find from clients that attend, and what are you yourself from an advisor position? What do you get out of joining in on these sessions?
Yeah, that's a great question, Richard. And I think, even going back to the book that Nelson wrote, and one of the things he put in there for all of us to see and understand is that, once you start utilizing this concept as a process that, we teach people how to, do privatized banking at the you and me level. Once you start to, adopt that in your life, it's important to surround yourself with other people that are like-minded and are in that same community. So I think those client coaching sessions are just give everybody that opportunity. And, it's one of those things that we get the advantage, Richard, when we go to think tank. We get to see what other people are doing with this concept. And I don't know how you, but I get excited when I'm there, when I see the opportunities that people have found and have realized. And it's just like, here's one of the things I wanted to talk about briefly today. And I heard this recently where somebody was going on about, they had a problem with the word infinite. And when, in Nelson, one of his, he called it the infinite banking concept. And, from my perspective, I get it. I understand that there's no shortage of ways that you can use this concept. But there's a conversation I heard when somebody said, I have a problem when they put the word infinite with anything financial. But it's just like when you get to those sessions, those live sessions with other people, whether it's I still learn from some of my clients. They figured out ways to start to utilize this concept and process in their life. And it's just exciting because, hey, I'm on the learning journey. I'm never going to end that until I walk out of life. That's my goal. Keep on learning. And in those sessions, Richard, I have to say, I always come away from that feeling like, huh, I got an idea or two that I'd like to even consider for myself. And that's what anybody that comes to those sessions is going to be able to experience, is just, that opportunity. And the other thing I think that works so well for people is they get to hear us often. They get to hear us speak about this, and they get to hear about it, what it's doing for us. And we all practice it in our lives. In a lot of ways, isn't it better for someone to hear from someone else who's just not a practitioner, not, doesn't teach us every day, but they've figured something out and they can help someone else with that knowledge they have. So I love those, those events, and quarterly, they comes around quickly, gives people an opportunity. The more engaged everybody is, the better the event.
Oh, I love that, Dan. And there's so many little nuggets that you put in there. And again, Nelson, he called it infinite because he says, well, when something's finite, you put limitations on it.
Right.
And he would also say, maybe what we should have done is we should have done it kind of, how they do, in Spanish, they say agua caliente, like water hot instead of hot water. And so he would say, well, really, it's concept about banking that can be done in an infinite way.
Exactly.
And so, and you talked about, obviously, getting together with people. Even Nelson mentions in the book that's on page 65, which I have open here. We'll talk about that in a second. But you talked about learning from other people. And I agree. That's one of the unique advantages of these quarterly coaching sessions, because, we connect with our clients, and they're accustomed to hearing our version of how we relay the information. And although we do our best to try not to lead with any bias that we have, I mean, we have our own human experience that shows up in how we relay information to other people. And so what I love about these sessions is that, my clients get a chance to come on, and they get to learn from, as an example, Dan. They get to learn from Sarblo and Jason and Vern and Jinjin and the other members of our team, and the other people that are sharing an experience or commenting in the chat box. And it's just such a really great way, because you never know what's going to happen. It's not like we put together big, huge PowerPoints and whatever. There's a lot of discussion that takes place, and there's certain resources that we have access to as authorized practitioners of the Nelson Nash Institute. And in fact, on this upcoming session, we're gonna be digging into one of those resources. And so, at our most recent think tank, you're talking about the think tank, we had an incredible session, lots of wonderful learning that we did there. But one in particular, we're actually going to be going over and covering and then debriefing with all the attendees. And that's a session that was done by the wonderful David Stearns. David is, again, Nelson Nash's son-in-law. He's the president now of the Infinite Banking Concepts company. He is the president of the Nelson Nash Institute. Amazing guy. He has really, truly embraced this process as a lifestyle, and his learning and his mentorship, his long extended mentorship with the late R. Nelson Nash. And he did a wonderful presentation called The Tale of Two Dads. And in that, he talks over his real life father, amazing guy who loved dearly and how his life progressed. And he showcased, then with Nelson, who was his father-in-law, and similar experiences that they had throughout their journey of life. And just certain areas where they diverged. And the biggest real divergence that showed up was after they were gone, and what was left behind from each of them, and where their priorities kind of were in life. And it's not a good, bad, or otherwise thing. It was just an understanding and a takeaway of what was different. And I think when people get to see that history, if this is your first day, you got a brand new policy, let's say, and you just started Infinite Banking, or maybe you're doing this for 10 years. Well, your history is limited to that period of time. Whereas now you could learn over the lifespan of two great individuals, and how one took a traditional path and one took a non-traditional path, and how did it amplify, throughout their life and then post life. And I think it's really, really powerful, and our clients are going to get a ton of value out of that. And so we have the ability to kind of do that in that private format, when you're a client of Ascendant Financial, which I think is really fantastic. And I'm pumped for it. I'm excited. I already watched the session again because it just went live like a couple of days ago. So I watched it again. I'm just like, oh man, it's so good. It's so good. Yeah. But you talked about the book that Nelson. So page 65, the title is Capitalizing Your System and Implementation. That whole section of the book is about ideas and ways that you can get started. Where do you find the money and that kind of stuff. But one thing that Nelson says in here, he talks about, the cash flow game for kids and stuff. But he basically says, look, organize or join one that's already in existence, a wealth club that meets periodically. Here you'll have the support of others that are working their way out of darkness. Be sure to include members that already have a good track record in practicing the principles of the infinite banking concept. This is important because you need to surround yourself with others of like-minded understanding. You don't want to be a victim of feeling that you are a lone ranger. We all need nourishment of a favorable environment, and no one elevates himself much above the environment in which he operates. Such an incredible paragraph. And that's the inspiration for why this client community exists, why we have some of our content on YouTube, why we have our Facebook group, and these coaching sessions for our clients.
Totally agree. And as we were speaking about this, I just went to that thought that Nelson put in his book, and I'm always amazed at how he worded things. And every time I read that book, there's just more I learn about it. And it just goes back to this thing that we're going to share about the tale of two dads. And I'm excited to see it again because if people come, and this is the key thing in whatever you do in life, you have to come with an open mind. I want to take something in. I want to see, this is the way I'm doing it. Is there a better way that I could be doing it? And that tale of two dads is great. This is just a great example of how people took a different journey in life. And then, you get to dissect that and you say, okay, what can I learn from it? And that's what happens so often, during our events is you get to take in information. You get to see how someone's done something and you go, okay, what can I learn from that? How can I apply that to my situation? And just to have that, community of people that you can connect with. I don't know how you put what value, how do you put a value on that? Because to me, it's something that you can't even put a value on because it's worth that much to have that connection. Here, just like, I heard from one of my clients recently, and he said, I love the fact that I get you guys' YouTube videos all the time. He says it helps me. He says it keeps me, in the thought of, opportunities, how I can use this. And, and I think you and I probably both seen people over time, Richard, that they start to put the pieces in place. They've got their own little banking system and they're using it and to a degree, and then they just stop staying connected to the group. And over time, their interest wanes and they just focus on other things in life and they lose an opportunity because as you and I know, and we want everybody else to know that this process should be the foundation for whatever else you do in life financially. And when you understand that, that's a huge step forward. And then how better to actually keep building off of that than to stay connected with, people that are using it in multiples of different ways.
Yeah. I was chatting with somebody earlier this week that was referred from one of my clients in Ontario. Awesome guy's been on our podcast. And of course he's an avid, a diehard infinite banker kind of guy. And so he's just, he goes off with 100 miles an hour explaining everything. And he does a really good job of it. He's a great kind of teacher, but I'm on with this couple. And of course they basically just kind of know that they want to do this and they've read the book. They had a copy of the book and the gentleman, he made a comment and I'll paraphrase, but he said, it's really interesting. It was hard to get your head wrapped around it. But then when you do, it was like, wow, he said. And it was because he's got, it's going through a life of what everyone else has told you to do. And there were folks that were very focused on, something referred to as like financial peace university. So it was all about paying cash and, get out of debt. Don't use third party debt and everything. And so they were doing okay in that, but although they had gotten rid of everything, they also hadn't accumulated anything.
Right.
Right. And so the mindset that they were in was fine. It wasn't anything wrong with it, but it was like, wow, it was like a doorway just opens to a whole new, and there's like this bright light on the other side of a new world of financial possibility and capacity. So fun conversations to have. And
Well,
I felt very similar. I know when I read the book,
yeah.
because it was like, okay, I thought I knew a bunch of stuff. I was wrong. And,
Yeah.
it's, what was I missing? Let's time to retool and let's figure some new things out,
Yeah, I like that, because I think for a lot of people, they come into it thinking, and this was myself. At one point, I thought, hey, if you could get to that stage, Richard, where you had no debt, you're paying cash for everything. That's it. You've got to a really good place. And how much better can it get? Now you just need to build, some streams of income, so that when you get to a point later in life, that you can actually have passive income. And so, and I'm sure for this couple that you were speaking to, as they start to see what they didn't see about the cost of the way when you do that, yeah, it works, because I did it. I got out of debt. I paid all of my debts off. I did all those great things, and yet, most of my money, where did it end up? Well, it wasn't with me. Like, I had the vehicle that I bought paying cash for it, but it depreciated. And pretty soon, over time, you have to replace that vehicle. Yeah, there's things there's assets you end up with. But all that huge volume of money that, you spent, money sent away from you, money that went away from you that you no longer have. And I just realized, as part of my journey, was how little of it I kept. And that was where, I just go, whoa, once I figured that out and started to see that. And that's what we get to enjoy when we work with people, is we get to see them understand the opportunities that they haven't understood. And how many times have you heard this, Richard? I'd be interested, because you've been teaching this longer than I have. And where people said, I wish that I heard about this 20 years ago. Like, that is something, if I don't hear it once a week from somebody that I'm speaking to, I'm shocked. It's just like, and again, I go back, and I get this all the time from somebody who says, well, I'm 63, Dan. Am I too old to start this thing? And I go, well, I hope not, because I'm 63. And yet he goes, well, I wish I'd heard about this 20 years ago. And I go, well, I'm with you too. Like, I heard about it, back in 2013, and I'm glad I did. And the second thing I'm really glad about, Richard, is I did something about that. I didn't just take something in, and I actually put, actions in place, and I started to change that outcome for myself.
And one thing that, Jason would say is, okay, well, you can't make that same comment 20 years from now. Right.
Exactly.
And that pops things into perspective. And,
Yep.
I was sharing with someone, I asked someone a question, might've been the same couple. I don't know. I asked a question, I think it was earlier this week. And I'd said, okay, well, hey, I just got a new policy in force, I don't know, 2 or 3 weeks ago. And I made a decision yesterday. Okay, well, it's time to get some new policies on my kids. So I'm going to be getting some applications done, next week. But I made this comment about, hey, well, in today's day and age, the world in Canada and in the States, but I'll speak to Canada, the product designs and choices and options we're starting to see competition in the marketplace. Competition is a good thing in the marketplace, because it's our friend James Nethery says, iron sharpens iron. So what it does is it levels up a little bit, and it allows us as consumers to have a little bit more choice. Choice is good. And so the type of policy that I'm going to get, on my kids, or on my, the one I just got on my wife, it's slightly different. It's all the same. The core components are all the same. There's just maybe some slight tweaks and adjustments to it that 10 years ago I didn't have available. And so I think about my first policy, which trying to think, did I just come over 11 or 12 years, maybe 12 years on it or something? I don't remember. Yeah, I guess actually, yeah, I'm in the 12th year of that policy right now. That policy, you can't get one like that today. And is the new one that I have, if I could choose between one or the other, well, I might have liked to have some of the options that the new one has, but if I could choose between one or the other, I would choose the one that I already have, because it's already 12 years old.
Exactly.
I can't get better than the one that's already got 12 years under its belt. It's impossible. The best
Exactly.
policy is the one that you started.
Exactly.
We don't have a time machine. You know, our friend Bernie says, well, you know, this isn't Back to the Future. You can't hop in a DeLorean with some you know, crazy scientist or whatever putting radioactive material in the engine so that you could go back in time. Every single component was everything you wanted it to be. I know I've got 3 of them that are like that I could have done differently. I just didn't know any better, but I'm still happy with them. They've done a lot for me.
No, I totally agree with that, because I think back and I look at my first policy a lot, and everybody knows Jason. He's the one that, you know, structured that policy for me. And we hear a lot of, you know, noise at times about how much base, how much paid up additions rider should you have, and all those kind of pieces. And yeah, the flexibility that we have now with life companies here in Canada is a lot different than even when I applied for mine back in 2013. So I look at that and I go, okay, I could build a better structure today than it could have been then. But man, I look at that policy, Richard, and I started with a small one and then I added a big one a couple months later. But it was like when I look at that one and I go, you know, I flowed over twice the amount of cash value that's in that thing. I've flowed more than twice of that through my policy because I've been banking with it. Man, that's what it is. It's my banking account. It's a perfect size for a banking account just to use it. And it just, you know, and I just love the fact that I started that thing when I did. And you know, going back to your comment about, you know, time, and I always tell people this because it's just to get people to think. I always ask them this question. So I say to them, so what do you think is going to be the most efficient year on the policy that you have started? And I just pause at that point and I let them think about that. Because, you know, you just see the wheels turning and they're thinking about it. And, you know, obviously the answer is the last one. And because we don't know when that is, because we're still here. But with every one of those, again, speaks to time. It speaks to the uninterrupted compounding effect that's there within the models that we use. And that's going to be the most efficient year for that policy is going to be the last one. And so I just get people thinking about that because sometimes when you think about the future, it takes you back to today. And what would I do differently knowing that? And I think it just takes people to that spot that you spoke about is, hey, the sooner I get something going, the more efficient it's going to be at whatever date that is in the future. And that's where I look at mine. The first 2 I started both in the same year. You know, they're just phenomenal assets that I own now. And, you know, I bank with them all the time. They're just the 2 best assets that I've got. And I've got other ones that I've put in place after that. But those are my 2 best. And I'm just glad I did it. And I think it's just worthwhile for people to understand. Because there's a question I had this week, and I thought I'd get your take on it, Richard. It's one I get all the time from people. It's like they go, okay, we want to start this. We want to get this going in our family. And, you know, they'll give you some background information about each one of them, the matriarch, the patriarch, and the kids. And they go, so who should we start this on? And it's like, I get that question all the time. And it's always a great question. I just love it when it comes up. I'd love to get your thoughts on when you get that question, because I know you've dealt with it countless times.
Oh yeah, happens all the time. And I you know, a lot of times people, again, they want to kind of dip their toe in the water. So they, okay,
Yeah.
well, what if I just start a little one on my kid? Okay, well, you could do that, except first off, do you have any coverage right now? So if something happens to you that your kid's actually taken care of, and if the answer
Yeah.
is no, well, then clearly that's not going to work.
Yeah.
And then additionally, like the underwriter is going to say, okay, well, how much coverage do the parents have? And if you don't have any coverage, well, they're going to say, well, why are you not getting covered and you're getting coverage on the kids? What's the reason? So they don't like that.
Yeah.
And then, you know, so what it boils down to is it's not necessarily about looking at who's going to be the first one to go, but it's about recognizing where are the financial resources that are going to be used to fund the premium.
Yeah.
And if we were to lose that individual or those individuals, we're going to have an awful tough time continuing to fund premium, aren't we? So we need to, you know, you have to have a pragmatic approach to not just looking at it. It's not just about, okay, you know, so and so is age 60, and this other person, they've got a kid that's age 35. Well, can I get it on my kid? I'm like, well, yeah, you might be able to get it on a kid. It's very possible. But what is the intrinsic advantage of that for you? If the person that's 60, whether they get a policy on the 60-year-old or the 35-year-old, don't they have the same amount of time left on planet Earth? Let's just say they got 30 years left, and we're going to kill them off at 90.
Yeah.
So whether the policy's on them or it's on the kid, it's the same 30 years, which means the cash is going to go reasonably similar.
Yeah.
There might be some slight variance, but it's going to go reasonably similar over that same 30-year period.
Yeah.
And then someone's going to die. Sorry, that's called life, and we can all just kind of get over it. And once you get over it, you get past that, you can actually start planning effectively. And so the older person, from all probability indications, is the one that's going to go first. There will be a death claim at that point. And then that produces a legacy transition. And it's a matter of, do you want to do that or not? And if you do want to do it, why do you want to do that? Why is that important to you? How will that make you feel, knowing that reality has been set in place? What does that ease off of your financial burden of life and your thinking about what you want to see happen down the road? And these are like intangible things. And these intangible things, you can appropriate an amount of value to all of them, but that value is subjective to you. So I put a price on a peaceful night's sleep, Dan, and I suspect you do as well. Now, if I don't get a good night's sleep, and I'm up and tossing and turning, or I don't get enough hours or whatever, maybe I'm crabby and cranky with everybody the next day, or 2 days, as it were. And then that has an impact on them. Well, so what price would my wife put on me getting a good night's sleep? I don't know. I've never asked her that question. There's a connection there, right? And so now you add that up over every day for 365 days, and you put 30 years on it. Cool. What number did you come up with? Great. Well, we can solve that with life insurance for the most part.
Appreciate that answer. And just for our listeners out there, is that every time we work with people, we spend time trying to get to understand everything about, how you're doing things. What are you trying to achieve in life, and how are you going about that, and how can we help you with this process? And one of the things I always remind people about is, hey, if we come away from this and we haven't set up a plan, you can't foresee every possible thing in life, but there's certain things like that you can count on. And so we want to have a plan that helps that family or individual or business or whatever it is really to achieve their objective. And so if we haven't thought of something about, okay, so we're going to start this on someone else, and you're going to be the owner, and this other person might be a child, and yet you don't have protection in place if something happens to you, well, we really haven't done you justice. And so we have those conversations with people, just like the matriarch and the patriarch. Those are the ones that I always start with. Like, if you haven't addressed that to some degree, then we need to think about that. Why wouldn't we do that? Because that becomes the bigger risk for this unit, this family, this people. That's what I love about what I do, Richard, above all things, is I get to work with people. And to me, that's what matters. It's like, I'm fortunate enough I get to make a living doing this. But above that is I get to help people and see opportunities. I get to, they get to see possibilities. They get to see that, hey, I can have a more peaceful mindset about all things with, if I use this as one of those tools to help me, one of those processes to help me to get there. So that's just something I thought I'd put out there, because it's just powerful for me to remember all the time.
And you get to do it all with a great team too.
Exactly. I do. That's a huge plus.
I do see a great question. He says, if I had $100K saved up, should I borrow from IBC or tap into the savings? And I'm assuming that's because there's a purchase to be made. And, what I would say is, if you had $100K saved up, where are you warehousing it? Are you warehousing it in someone else's bank or in your bank? And, I would rather see that there was $100K saved up inside a cash value. And so if you have $100K in cash value and you have $100K in a savings account, then you're probably not paying enough premium, right? So that means that there's been a misallocation maybe of premium, where it's time to get a new policy. And if you had $100,000 that you had earned and worked with, and you had it sitting in a bank account, and you want to, and your objective is to do more infinite banking, that's what you're looking for, and you also have 100,000, available in a policy or a system of policies. If a deal comes up that's $100,000, I would borrow from the policies to go do the deal. And then I would take my good dollars and I would use the insurance company's money to go do the deal. And I would take my dollars and I would use it to re-up what I'm able to do and reimagine my thinking on my system of policies. Because if you're going to go do a deal, the deal should have some dynamics about it. Hopefully that will generate profits, cash flow that should sustain the deal, right? So your repayment situation on the borrowed money from the policies would have to be factored into your decision making of the deal. And so when you look at a deal that way versus saying I have 100,000, I can go do the deal, versus hey, I'm borrowing 100,000 from the insurance company that I co-own, and there's going to be a cost of that borrowing, absolutely, but my cash continues to rise every day. But now you're also looking at the deal differently because you're factoring in some of those costs, and so your criteria that you're using to scrub deals shifts. Right. So I think there's a lot more thinking that goes on when you recognize that the reservoir where you're going to access money from is the policy, and how you go about doing things and the things that you would normally, you might shift and change what you might choose to do because of that additional dynamic. And that's kind of part of the, I don't want to call it magic, but I think that's some of the again, it's one of those intangible things because our brain is just views information differently once the policy's involved in the situation.
I totally agree. That's a good answer for her because it's, you just need information to be able to help her make a good call on that. But it's like, I would totally agree, Richard, where if I had, because that's what that's how I fund a lot of my policies is out of savings. And I purposely, I've got huge premiums I pay every year. And part of that's coming out of savings that I've saved. And so I've just structured in a way that that's where my savings go to, because I know once they're housed there, warehouse there, their growth is never going to be interrupted. And I can still use it for things like whatever comes my way for an investment. So there's ways to do that. Step it in over time. Just like doesn't go in all at once. You just, come up with a plan, have a good coach, talk about it. And I think that's going to serve her well.
Yeah. And it looks like there's a follow-up too, that it's for the purchase of a vehicle. And same example, I would, if a vehicle is going to be purchased, I would, again, it depends on where, there's a lot of factors in there. But for me, if I'm going to go buy a vehicle, my intention is to purchase it with a policy loan and then make repayments to the loan. One of the other psychological advantages that happens there, everyone has a different, I'll call it mental baggage over the word loan. Right. Depending on what age or stage of life you're at or what you were trained in their household growing up, there's an association to the idea or the word loan. And so when you have an outstanding policy loan, let's use an example. We have 50,000 in a savings account. We have 50,000 in a policy loan. So if we drained our savings account to zero, you might be, I want to refill my savings, and you want it to be above zero, but you may not make the mental connection that you want it to be greater than 50,000. Whereas if you have the policy loan, what happens is, because the loan is there and you still know inherently it's a loan, even though it's with a company you own and control, that the life company you're a participating owner in, your mindset to prioritize that loan repayment, which is the best way to save, is to repay policy loans. It's a higher level of personal accountability than to just refill your savings account. Most people don't have the intentional wherewithal to say, I'm going to refill my savings account with an appropriate car payment every month that is at least what a market lender would have charged me or greater. We don't think that way because we haven't been taught to think that way. Nelson tries to teach us in the book. And so when you utilize the policy loan, because it still has the word loan attached to it, even though you're using the insurance company's money and you have some control and they're growing your money at the same time, your desire to want to retire the loan creates a psychological advantage for you to be more efficient with your money.
Yeah, that's a great way to put it, Richard. And as you were speaking, I was just thinking about we got recently from one of our clients, and I think it was in one of our live events actually, and we were showing the truth of lending, and how much the volume of interest is. And someone asked, it would be really nice to see an example right side by side with the commercial loaning, borrowing example of doing it with the infinite banking concept, like having a policy where you had that cash value in there to do the same thing, buy whatever the value of that home is. And so the interesting thing is I've been working on building that example, and I've got the information I need now, and it's quite eye opening when people understand what the difference would be if you had that $400,000 loan at a commercial bank, or you were able to take that $400,000 mortgage onto your own bank using this process. That it's like we always talk about, when you use this concept, you're going to be able to get the interest back that you were paying to commercial banks if you use this process. Well, you go over, the 25 years that we show that truth of lending concept in, and you not only get your interest back, Richard, you get all your payments back. It's not just the interest. Your value will be greater than all the payments that you pay back. That it's just the way process works. And I just go, like, for me, even every once in a while when I work on stuff, I just get this aha moment. Like that's a pretty enlightening thing to see. And so when we think about buying a car, I'm in the same boat. Like, that's the way I buy my vehicles now. I'm using my system because I know the difference it makes over time. And I love what you said, Richard, about, that we have that desire to pay. We're very good at that. If we have a loan at the bank, we think about that. We go pay it back. Well, if it's a loan in our own system, it feels the same way. I want to pay that back. That's the way I feel. I took out that loan for a reason, and it's my own banking system. I should even feel even more passionate about making those payments back. I could go on and talk about that topic for a long time, but it's just something I get excited about every time I speak about it.
Well, and I want to, I guess, piggyback on that, because I want to, for a bit of point of clarity, because sometimes people are more literal than others, and so they take the things that we say maybe to a very literal degree. And so what we're really talking about is equivalency. So you have a mortgage, let's say it's 400,000, and if you would make payments over 25 years or 30 years, you would repay, let's just say 200,000 in interest. I'm going to keep it simple. And that would become 600,000 of total payments, the principal plus all the interest. Well, if you had that resource available in a policy, then that means you have 400,000 of cash that's growing every day. And so if you go over that same 20-year time frame, you're going to return the same payments, but they're now going to your own pile, which means you have all those payments available to reuse. By the way, you don't have to wait 25 years to reuse them. You could be reusing them along the path, which is an intangible that we can't quantify very well mathematically. But because the cash is growing that whole time from, and the death benefit, you're going to have equivalency of all that available to work with as working capital again at that time frame. So that's really what we're saying. Are you getting the actual quote unquote interest back that you paid the banker? Well, you didn't technically pay the banker in that scenario, but you would have paid them that amount of money. Exactly. And if that amount of money is now available in a system that you own and control, ergo, you have the equivalency of that financial value representing usage for your own family. And the worst case scenario is that somebody dies. Well, guess what? It's going to happen anyway. We just don't know when, and we don't know who. So if we have enough bodies covered, there's going to be an influx of capital. And if there is any outstanding policy loan, that gets wiped away. And you can reset that system. It's like, Staples, they used to sell, I think they still sell those easy buttons. So you can say, first of all, it wasn't that easy, but I just imagine that being like a reset button, and somebody dies, and it's like, boom, and we're resetting now all that financial value that is coming back into the system. So we get run rate on all those dollars again, and we get to keep that out of the Canadian government's hands, which is also pretty nice.
Oh yeah, I totally agree. And that's a good follow-up to what I said there, Richard, because people, again, when we get into numbers, it can take people to a lot of different places. And it's really what we're trying to do is focus on value. Like, how do we get the most value for someone? And that's what I focus on. It's like, that is a conversation that you have to have with your coach, and you have to sit down and you have to talk about, how this works, how this looks. But hey, if you get an opportunity to understand, how this makes a difference for you. That's what I get excited about. It's like, until you actually can control the banking function as it relates to your needs, well, there's an opportunity. That's what I tell people. You have an opportunity. And if you understand that and start to work towards getting to that point, you're going to add value, wealth to your system, your family. That's what I always usually focus on, your family values. And that's what this gives everybody an opportunity to do. And everybody's situation is different and every case is different, but it works. And that's something we get to live, we get to see. And yeah, I just love speaking to people about it.
Oh, Dan, this was awesome. We got a chance to talk a little bit about the client community. We got to talk about quarterly coaching events. We got to chat about some fun questions. And I really appreciate this, man. It's good. We need to do more of these. And thank you for joining me today and taking up Jason's position here. I really appreciate it. I was looking forward to this a lot. And for everyone tuning in, keep your journey of learning going. Make sure that you get a copy of the book if you don't have one. If you have one, if you haven't cracked it open in a while, go and crack it open. I would suggest you grab page 65, some good content on page 65, including the paragraph that we talked about earlier, and recognizing that the power of being in a quote unquote wealth club or a community of people that are like-minded is really advantageous. That's why we have YouTube channels, we have live events, we have these live sessions on our Facebook group and so on. And we have the podcast at Wealth Without Bay Street. So all these are resources that are available to you guys. And thank you so much for tuning in. And if you're watching the replay, well, thank you too. All right. Have a great rest of your day, Dan.